for, you know, a bit of cheapness, a bit of more of an opportunity on our market, in which case today maybe you had some.
Potentially, James, yes. Certainly seeing some profit taking across all of those sectors, as you said, seeing all sectors closing in the red. So certainly quite a disappointing day. Of course, we did see some caution over on Wall Street overnight, but certainly didn't see falls in the same magnitude that we did see on our market today. So certainly was quite disappointing. I think in the absence of any real major economic news, it really was a lot of stock-specific data coming out in terms of the slew of AGMs that we had, and also some results that were out, and that was really driving our market today. Those sectors really driving lower, as you mentioned, that materials sector and the financial sector, the two biggest sectors on the market, really continuing to drag. We did see iron ore relatively unchanged overnight. Copper was slightly higher, and we did actually see gold up about 1.1%. But despite seeing a little bit of a bounce in those commodity prices, we really still saw that materials sector under pressure. I do suspect that those iron ore players are still coming under pressure as a result of a lot of downgrades from analysts to that iron ore price. As a result, we did see Atlas Iron and BC Iron, the two worst performers on the market today. We also saw that information technology sector coming under pressure. Of course, Computershare held their AGM today, and there was some slightly disappointing commentary coming out from there, and as a result, Computershare closed down about 5% or so, really dragging down that sector. Also, consumer discretionary was another one that really underperformed. Again, a very disappointing result that came out from Myer, and that obviously dragged down that sector. So, as I said, really a bit of a disappointing day today, as you say, a sea of red across screen, and really continuing the losses that we have seen all week.
Your own view on the near-term outlook for our markets?
James, I do certainly agree with Michael. I do think in the short term we are potentially vulnerable to further falls. If we have a look over at the US, as I mentioned earlier, we're continuing to see the down, of course, the S&P 500 trading at those record highs. So I do think we are going to start seeing investors pulling back and taking a bit of a breather off some of those levels. Of course, we know that earnings reporting season over in the US is coming to an end. It does look like it's been a very strong earnings reporting season, and really helped out by a lot of strong economic data that is continuing to come through. But I think as that does come to an end, we potentially will start to see investors pulling back, and I do think that will fall across or translate across onto our market as well. I do also think in the short term we certainly are still vulnerable to those commodity prices and any further falls. Of particular note that that oil price, which obviously has been trading at very low levels, and of course that iron ore price as well. There's a lot of speculation out there that we are going to continue seeing that iron ore price falling. So I do think that will continue to weigh on that energy sector, and of course that materials sector as well. So definitely in the short term I think we are still vulnerable to further falls, but longer term, coming into the end of the year, probably do remain a little bit more optimistic, and do think that the longer term outlook still remains positive.
What do you think the outlook for Atlas Iron is, Leanne? Down almost 14.5% today. I mean, this is not a good time to be holding their shares, I wouldn't have thought.
It really isn't, James. We've continued to see Atlas Iron coming under significant pressure. It's been one of the worst performers over a number of consecutive trading days. I think there's a lot of concern in terms of the outlook for Atlas Iron. It is the highest cost producer out of all of the iron ore stocks. It has a break-even price at around $79.80 US a tonne. So obviously we're seeing the iron ore price trading well below that. So that certainly poses a significant risk to their earnings going forward. So obviously very vulnerable to any further weakness in that iron ore price, and I certainly think that's resulting in a lot of caution from investors. I think on top of that though, if we look at the actual business, there is still some problems there. Their Horizon 1 assets is performing very strongly. The company has confirmed this in their previous reports, but we do think that Horizon 2 still poses a bit of a problem in terms of a port and rail solution, which they haven't yet agreed on. So within the business, I think there's still are some issues there. They are continuing to look at cost reductions, but I think overall it's really leveraged to that iron ore price and exposure to that iron ore price, which is really going to continue to put Atlas Iron under pressure, and we certainly remain very cautious on the outlook.
Banks are all lower, but CBA a standout in terms of the breadth of falls, down about 1.4%. We had the AGM today. Clearly something didn't strike a chord with investors.
It clearly didn't, James, and I think it was actually quite an interesting one. If we look at some of their commentary, sort of saying that they are still cautiously optimistic on the outlook for FY15, a lot of that commentary that came out actually mirrored what we saw out in their report last week, and of course at their result back in August. So there weren't too many surprises, I don't think, out of the AGM today, but potentially investors a little bit worried about that cautious optimism. Of course, them saying that those low interest rates have actually helped out that housing and construction sector, and obviously offsetting any fall that we have seen in the resources investment area. So it was quite surprising, but I do think potentially investors are pulling back a little bit. We are continuing to see CBA recovering actually from a recent pullback that we did see towards the end of July, beginning of August. It's actually recovered from those lows about 10.4% or so. So it is back trading at those high levels, and potentially we're seeing investors pulling out of the stock as a result of that. Last week, of course, we did have that trading update that came out where we actually saw a very surprising result and certainly beat on expectations. I think investors or analysts out there actually believe that 2014 was going to be as good as it would get for CBA, but certainly proved a lot of that commentary wrong. But I still think there is potentially a bit of concern out there in terms of those falling net interest margins, which we did see coming through last week. So I do think, looking at that commentary, it didn't look too bad in my mind, but I do think as a result of those high levels, potentially we're seeing it trading at, certainly seeing investors potentially selling out and pulling back out of it a little bit.